Welcome everyone to the home of crypto. If you want to maximize your return in 2023, then stay till the end. I think it'll be worth your time. And don't forget to like and subscribe. All right. So I kind of wanted to do a little experiment. I want to go over on how to create a crypto portfolio in 2023. Uh, Primarily, I'm going to focus on the top 10 to 15 cryptocurrencies based on their market cap ranking. These blockchains have also been around for a while and some made great strides, be in the payment processing section or metaverse. There are a few thousand projects out there, and some of them are total scams. But I think these crypto projects do offer best returns based on their past performance. Remember, this is not a financial advice. This is what I'm doing. So do with that what you will. I'm going to create a portfolio along with you guys with the specific allocations. And then we'll kind of see their performance at the end of 2023 or maybe 6 months down the line and kind of track our progress and then do the same thing at the end of 2023 along with you guys. And then we'll take it from there. So, you know, I really think that these projects will outperform Bitcoin and ETH by far. Now, I know that our percent allocation seems a little bit more aggressive. I know some Bitcoin maxis might think that I'm kind of going out of my mind by allocating to only 25% to Bitcoin, because what they usually do is that they would have like 50% in Bitcoin, they would have 25% in Ethereum, and then roll over the other 25% and distribute it in other altcoins. I think this is a little more aggressive, specifically on how I have allocated 10% to Solana, Matic, Cosmos, and Avalanche. But I think they do offer the best returns going into 2023. Usually, when it's a bull market, the altcoins will outperform Bitcoin and ETH by far. That in the bear market is when you would have to be more conservative. And then if you do want to stay in crypto in the bear market, then usually what happens is most people would trade their altcoins for either Bitcoin and Ethereum. Now, when choosing projects, what really matters, in my opinion, are the number of validators, their transactions per second that these blockchains could process, the number of developers they have, the transaction fees. Because let's face it, no one wants to pay more than they have to. And these factors really portray the health of a project long term and kind of ensure that you're not putting your money into any kind of rug pulls. I understand that, again, that Bitcoin and ETH only have 25% allocation each in my portfolio. This is aggressive, but I think it'll outperform for sure going into 2023. Now, like we just talked about the transactions per second validators. Now, these are truly amazing factors in my opinion because it sort of shows that where some of these projects are going. And I think Solana being able to process 65,000 transactions per second, I think they're doing an amazing job. And so is Matic. I think Matic is kind of catching up. There are light on number of validators, but keep in mind that they haven't been around for as long as Bitcoin and Ethereum has, because then again, the reason that they've been around in the first place is that they could do more transactions per second than either BTC or ETH can. And to scale Bitcoin up to that, I think will be almost impossible. So they have their own place. Think of Bitcoin as more of a gold and Ethereum as more of a silver and the rest of these other metals. If you were to think of them in that traditional sense, but I think they do offer great value going forward. And like for example, so if you look at the transaction fees that some of these blockchains offer, it kind of makes sense as to why they even exist in the first place. Because if you look at, for example, if you look at Solana, right? if you look at Solana and compare something like to MasterCard, it makes sense as to why these blockchains are even around and how fast these networks are. Not to mention the trustless mechanism that's already embedded into these blockchains. For example, Solana could do a transaction in 0.00025 versus something like Mastercard or something like American Express that's 10 cents or 5 cents. So Solana could do that in 1/100th of that price and do it much faster. Not to mention all the complications and the fact that they have to be verified and these networks are not as fast. So I think the future is going that way. It'll definitely take some time, but I think these altcoins are in a great position to kind of give Visa, Mastercard, and Discover, American Card rent for their money, and that's kind of why I'm putting my money where my mouth is. And so if you look at and these are some of the important things, though. It kind of determines as to who wins in the future when you look at these blockchains and look at the number of validators these guys have, developers, or their transaction fees, then it kind of makes sense as to why they are succeeding and where their future is actually hitting. Now, this is a very important factor, in my opinion, when you take into consideration. So now let's jump in and take a look at some of the charts to give you a better idea of the current technical setup and why I think 2023 is a better year to start investing compared to 2022. Because 2022 was a horrible year for most risk assets because of the macro factors and, Fed keep raising interest rates. Anyways, so we'll take a look at Bitcoin, right? So it was like right around $70,000, and all year 2022 we were down about 77, 78%. Mind you, we did have this little rally in the past month or so, down from 15,500 all the way to like 24,000 almost. So that's about 52%. If Bitcoin can keep up this rally, I do think it'll test that 200 and that 50 EMA. And if it can test that and have that as a support and prices push up off of that support, then I think it's going to be the start of a new bull year for sure. But worst case scenario, in my opinion, if Fed keeps raising rates even higher, and there's some sort of a black swan event out of nowhere, and the monetary policy is even tighter, I I do see the case for Bitcoin going down all the way to 12,300, 12,400 area. But I think that'll be a lifetime opportunity, honestly. And it might do this little weird thing. Will accumulate for a little bit. It will just like do this little dance here and then accumulate over time and then take off. But if that happens, I'll definitely be buying more. It's not something to it's not something to scare you out of the market completely. So just keep that in mind. That there are major factors that could potentially push the price of Bitcoin down all the way to 12,000, and that would be the worst case scenario. That's absolutely worst case scenario in my opinion. It will, I think, if it can come back down and test that 250 EMA, and there are more buyers there and support that that 200 EMA or that 2050 EMA serves as support, then I definitely think this is the start of a new bull market. And kind of the same can be said about ETH. ETH has this 883 or 850 as the support level. I think it'll kind of stick around there. And the worst case scenario for ETH I see around 475. That's the same case scenario that we have just outlined for Bitcoin. A black swan event. Fed keeps pushing interest rates even further. They currently have, I believe, 50 basis point for the rest of the year. So that's already baked into the price of both Bitcoin, Ethereum, and actually most risk assets. But if they do raise interest rates again by, like, let's say 600, 700 basis point going, forward, then I could see a case, I could see a scenario where ETH will, go down all the way to like 480 or 450, and Bitcoin will go down to about 12,000. And the same could be said about, altcoins. And the same could be said about stock market, because that's the interesting thing. Most people think that it's just the cryptocurrency sector that's experiencing these extreme volatilities. But if you look at some of the stocks in the S&P 500, the same exact case can be made about those. So like by the end of 2022, S&P 500 was down almost 30%. But within that S&P 500, we had cases like Zoom. Zoom was down, let's see, from the top 500 something down to $73. Now we're looking at 80, 88, 89%. Another great example is Shopify, right? From the top around like 177, 178, all the way down to $23. And that's the 86% drop. So, I mean, I could give you tons of more example to sort of make the case that, the crypto market is not the only sector of the economy that experiences these extreme volatilities. Remember, these are all risk assets. So when Federal Reserve tightens the monetary policy, it affects all these risk assets. So it's not an isolated event. Now, so before going into more details, now imagine you have, let's say $5,000, and that you want to put it into crypto. So this is how I would allocate. These are my allocation based on $5,000 total amount. Mind you, that if we do experience a worst case scenario, that I will be DCAing um, into these crypto projects. So we currently 25% of $5,000, like $1,250. $1,250 for Bitcoin, $1,250 for ETH, 500 for Solana, 500 for Matic and Cosmos, and so on and so forth, as you can see in this chart right here. And then we'll track the progress along the way. And then I'll tell you what I would do in that worst case scenario, right? That we just outlined. Worst case scenario, Fed raises interest rates even further, some black swan event. I'll be DCA into these projects for sure. I'll slowly DCA in every month until I am to the level where I'm comfortable with my risk. So it all depends on your comfort of how much risk are you willing to take. And so that's my current portfolio. That's what I'm planning to do, and then we'll kind of track the progress of the portfolio going forward. And you're more than welcome to just watch, see what I'm doing, and or create your own portfolio. If you have any thoughts or comments, just don't forget to share, and I'll do my best to get back.